Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for February 20th, 2022. If you haven't heard the big news yet, we launched the Trader Funding Program where you guys and gals can take an assessment to try to access our funds to trade. There's a one-time assessment fee. You just have to follow the rules, make a 10% return without exceeding any of our drawdown limits. That's a 4% intraday drawdown or 5% max trailing drawdown. If you can achieve a 10% on a demo trading or paper trading environment, you can access our funds. Check it out. It's a brand new program. It's exciting. We've had a lot of people take up on it. It's great. Now, I also have to mention one of the things about doing the Trader Funding Program is you get access to ForexAnalytix for free for a period of time, depending on how much money you're looking to access. So if you haven't tried out ForexAnalytix, try it out. It's only $1 for 10 days. Excuse me. Make sure you download the mobile app, get involved with our community, get all of our charts and all of our analysis. And you know, the way people are looking at it is, why would I join anybody else for the Trader Funding Program or trying to get funded to get a live trading account when I can have the community and support of ForexAnalytix? And that's what it's all about, is being able to have ideas, trade ideas, a community, people to kind of leverage as far as, you know, what are you guys trading? What are you guys doing? And just kind of knowing what the rest of the market's doing. So make sure you take advantage of that. Find the links in the description. And by the way, if you like these videos on Saturdays or Sundays, on the week ahead videos, make sure you give us a thumbs up, subscribe to the channel below so you don't miss any of our content. It's free to subscribe, and so it's free to give us a thumbs up too. All right, let's talk about this next week. As you all know, we're in a headline risk environment right now with the situation in Russia and Ukraine obviously heating up. A lot of people are speculating that after the Olympics end this weekend, you're going to get the Russian invasion of Ukraine, whatever that's supposed to look like. You know, we're kind of shackled to the news wires, listening to reports to find out if things are happening or not, and that's obviously keeping the market on its toes. I'm not going to go into the live charts here into ForexAnalytix, which you can actually access the live charts right through here inside of the platform. I'm actually going to go to these charts so we can actually draw on them a little bit. But I'm starting off with a lot of fresh charts here to give you an idea of what I'm looking at. And let's all keep in mind, I don't want to say there's not a lot of data next week, because there is. We have the RBNZ next week. The most important data of the week is going to be on Friday. We have the core PCE data, you know, a lot of inflation data, you know, factored in there. We have US GDP next week. We have a lot of PMI data coming out across the globe. But really, you know, we're going to be glued to the headlines. And by the way, when you're using ForexAnalytix, the live squawk feed right here is very good to use throughout the course of the week, just to have the headlines as they hit. You know, if you're not in a chat room, or you're not paying super close attention to, you know, Fox Business or CNBC or whatever, Bloomberg, whatever you may be watching. Anyway, just needed to throw that out there. Let's start with the charts. Okay, so obviously the euro risk right now is, while it's below 115, and let me take the magnet off here. While we're below 115, that's really key resistance in the euro. Now notice that the pullback has been limited. You know, if you take the low around the 111 and change, and let me change this up for you a little bit so I can get a better fib. No, the 618 retracement comes in around 112.65, and that's you're gonna see a lot of confluence horizontally around the markets because of this. You can see it right through here. A lot of horizontal support. Did I say resistance? I meant support. 618 retracement. So there's going to be a lot of support down here. One thing I have to point out is the euro is holding up very well with the news of Russia possibly invading Ukraine. That's the one thing that we have to take into account. My opinion would be, if that was not happening right now, the euro dollar would be trading probably closer to 116, 117 near the 200-day moving average. The reason why that's important is because if there is some sort of resolution to the Russia-Ukraine situation and we start to see, you know, talks evolve from all parties, the US gets involved, and it seems like it de-escalates, that is going to be an upside risk for the euro should that happen. So one of the reasons why the euro is on the defensive right now is because of that. So just keep that in mind. If you're on the short side, you should be, I don't want to say you want to be hoping that things escalate in the Russia-Ukraine situation, because no one wants that, right? No one does. But that would be what's going to benefit you as a trader. Now, if things de-escalate, you're probably going to see that euro pop right back up towards 115. This is obviously key resistance. You got to imagine there's a lot of stops hovering around that 115 level. I've got to imagine buyers are going to be stepping in anywhere between the 112.50, 112.50 to 112 level, which will be the 78% retracement, a lot of lows right over here. So I think that's what we're going to be looking at with the euro into this next week. Obviously, we're headline driven. That's the thing you got to be paying attention to. What's holding up really well is the US dollar, Japanese yen. I want to draw a little bit on the yen because I'm going to take us out for a longer term stroll in the markets. And if you take the US dollar, Japanese yen, and you just draw a trend line from, back here in the 90s. So let's go all the way back here. Actually, we'll start. We're going to start here at 98 in 1998. So 1998 to these highs right here in 2015. We're closing in on that resistance, which comes in at 117 roughly. It's just a couple hundred pips away from where we're at. The reason why that's a big deal is because if you actually go over to the daily chart and you draw like I'm just going to do it for you I'll just keep this drawing. I'll switch to a trend line here. So you take these lows, you go across the bottom here, and you duplicate that and go across the top. You'll notice we have like the channel top that comes in right around that 117 in the event we get up there. Now, obviously the 116.35 is big resistance. That's like a double top that's already brewing. But I'm assuming that this area that you see us in, this little area is a range, and the lower end of that range comes in around 114, let's call it 20 to 40, somewhere around there. Upper end of that range around 116. If there is a resolution in the Russia-Ukraine, you notice I'm going to say that a lot today. If there's a resolution in that situation, here's what I'm most fearful of. Okay, and this fearful in the markets. This is fearful. I want to make sure I use it in the right terms. I have a feeling that the dollar yen would actually strengthen and we'd move up towards 116. Now, why would that happen? Why would we see a rally in the US dollar, Japanese yen back towards these highs? Can you take a guess? So the thing that we have to look at is the 10-year yield. If you look at 10-year yields are holding up very well despite what's happening in the Russia-Ukraine situation. Now, if the dollar yen spikes higher, if things de-escalate in the Russia-Ukraine situation, then what's going to happen is you're going to see a rally in yields. Bonds will come down, yields are going to rally, and that means that the dollar yen would go higher. But let me ask you this. Going back to yields, if the 10-year yield breaks higher because things get better in Russia and Ukraine, and we're trading above 210 in the 10-year, let's just say, what might happen after that? Because I think what most people are thinking right now is if things get better in the whole Russia-Ukraine situation, we're going to see a rally in stocks, right? You're going to see a relief rally. You're going to see the market just kind of rally back. And you notice that, we've struggled up here at the 618 retracement, right? So if things recover in the stock market, I think it's going to be very short-lived. And that's the point of this conversation, because stocks are going to bounce on a relief rally, so are yields. And when yields go higher, the dollar yen goes higher, the market's going to go, oh, I don't like it when yields are up here. So that relief rally that we might see in the stock market might be short-lived. It may only live 2-3 days, and then you might see that dollar yen have a real big reversal from the 117 level. So that's the point of today's week ahead video, is I'm preparing for the best But how are we going to trade it? If things hopefully get better in the Russia-Ukraine situation, stocks will rally, should be a short-term, short-lived rally. You might see the dollar yen spike back up towards 116.35, 117, hit that major weekly trend line, and 10-year yields hit a high and then reverse. And that's how I want to play this market going into this next week. Now, obviously, you're gonna say, well, Blake, that sounds all great and all, but what happens if things don't work out like that? How about if things do escalate? Well, that's when we have to start watching the S&P as we're trading below the 200-day moving average. If we start trading back below the 4250 level, 4250 in the S&P, that would be right about here. We start trading back below the 4250 level and we get a hold of that support and we really start trading heavy, I think the market has the potential of doing an A, B equals C, D. That's not what I want to do. Let's clone that. There we go. A, B equals C, D move that takes us back down to 4,000. So that's how I'm viewing the, if this happens, how are we gonna trade the market? If this happens, how are we going to trade the market? And I think that's the way we need to approach it this week, because obviously you and I, we don't know exactly what's going to happen. We have to trade reactively. Now, one of the other things I want to talk about this week, and you thought I was done, I'm not. All right. And let me just stop here and say, if you like what you've heard thus far on the week ahead video, please give me a thumbs up, give our team a thumbs up. Subscribe to the channel, retweet this when you see it on Twitter. If you see it in LinkedIn, share it. That'd be great. Love that. I'd appreciate that because I appreciate you. All right. Now, what else could happen here? Well, I want to talk about this next week. We have the RBNZ. A lot of people have been down on the RBNZ, thinking that the RBNZ, the rate hike expectations for the RBNZ are way more than expected. Now, that may or may not be true. You can agree or disagree, or we could all agree to disagree. It doesn't really matter. But the RBNZ does meet on the 22nd. Well, actually, they meet on the 23rd. It'll be the 22nd here in the United States, and in North America, it's going to be later in the afternoon. We're going to be watching that because if you haven't been watching the Kiwi actually has been setting up for a possible rally. So there's a couple of things that could affect that. Obviously, if things get a little bit better in the whole Russia-Ukraine situation, you might see the Kiwi get ahead of this move and start a little bit of a squeeze higher. Now, with the RBNZ meeting, everybody's expecting the RBNZ to raise rates. The question is, how hawkish of a rate hike are we going to get? And if it is hawkish and we get a rate hike and everybody says, wow, those expectations that we have of the RBNZ raising rates, 6-7 times, whatever, in 2022, that seems pretty realistic. You might get the Kiwi squeezing because I think a lot of people have been leaning on the New Zealand dollar. As a result, they don't expect the RBNZ to follow through. So this is where you can see how we're nudging up against key resistance already. If we get a squeeze going in the Kiwi, you got a false breakdown, breaking this daily trend line. We might be trading back up towards this 200-day moving average, up towards 69.50 relatively quickly. And it's not just the New Zealand dollar, guys. Take a look at the Kiwi yen. The Kiwi yen, false breakdown. We are probing some pretty key resistance here. We get above the 78 level. This little high right over here from a couple weeks back, that's a 200-day moving average. We could start squeezing here. And it's just not the New Zealand dollar. It's just not the New Zealand yen. You should take a look at other New Zealand pairs, and I bet they might catch your eye. I'm not going to do that right now because you know what I'm going to do right now? Right now, I'm going to say adios. And I want to say thank you all for listening to me today. And remember, we broadcast every single trading session in the morning. I believe it's 8 o'clock Eastern. It's the F.A.C.E webinar. It's free. You get not only my opinions and my looks at what charts I'm looking at and things that I'm thinking about for the day, but also the rest of the ForexAnalytix team. Plus, you get great interviews from Dale Pinkert every single week. He brings in, he brought in Jamie Reuters, real senior Reuters journalist on Friday. It was a great interview, but he brings in a lot of really cool people in the industry that you get to hear for an interview every week, or every day, excuse me, almost every trading day. So make sure you join us there, and make sure you check out the Trader Funding Program that we have just recently launched. We'd love to have you in the community. This is a great way to get started in the community. You can paper trade and try to qualify for a larger real money account. So guys and gals, my name is Blake Morrow. I hope you have a wonderful remainder of your weekend. I'll see you on Monday morning on the F.A.C.E webinar. I know it's President's Day, but we'll be there anyway, analyzing the heck out of the market, trying to figure out what's going to happen with Russia. So I'll see you there. Have a great one. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.